What's up everyone, it's Karthik with MoneyVest. Welcome on board for our market open live stream. We're seeing a little bit of relief in the markets right now as AMD is absolutely popping a pre-market on this Meta deal. So a multi-year deal with Meta, over 6 gigawatts of chips that they're going to purchase worth about $100 billion and a potential stake of 10% in the company as well. We're seeing a massive uplift in AMD, up over 10% pre-market. Meta Platforms, on the other hand, is basically flat to slightly down, about 30 basis points. And then we've got HIMS on earnings selling off a little bit further, down over 6.5%, even though they beat expectations on EPS by over 100%. Revenue was a small miss. But all in all, it is down 6.5%. They did not raise guidance, I think, or maybe it might have been like a very small raise. Overall, we're seeing a drop here down to new 52-week lows at under $15 per share. And crude oil prices trading up to almost $67 per barrel. We got volatility trading up to over 21 right now, up over 30 basis points at the moment. So hope you all are doing great as crypto continues to struggle. We're seeing Ethereum trading now at just a little bit over $1,800, with Bitcoin trading now under $63,000. If the audio and the video is good, just give me a thumbs up. And just want to make sure there are no technical issues with the audio or the video. So good morning, good morning. Microsoft, $400 by end of the week. We'll find out where Microsoft ends up. Pre-market, of course, it has been selling off yesterday. Right now, trading back up to 385. So very close to that next support down at 380. Down to as low as 350 is going to be that next support if it does break down below this level moving forward. So good morning, good morning. Hoping AMD was coming back to 170 to fill the gap. Yes, you and me both. AMD did see a very nice out of the blue Meta announcement and pushing it right back above $216. Validated that support very nicely here at around 193, 194 before pushing right back up. So here is the state of the tariffs. But before we get there, Meta this morning announced a multi-year deal with AMD that will see the social media company deploy up to 6 gigawatts of AMD graphic processing units, so GPUs. And the chip agreement comes just 1 week after Meta inked a deal with Nvidia to use its processors. And today's announcement is seen as a major win for AMD, which has lagged Nvidia in the AI chip market, and shares obviously jumping over 13%. So not only that, I think there's some reports that Meta might take some ownership in AMD as well. So the agreement builds on the company's existing strategic partnership and aligns roadmaps across silicon, systems, and software to deliver AI platform purpose-built for Meta's workloads. And reading further, Dr. Lisa Su, CEO of AMD, said, and I quote, "We are proud to expand our strategic partnership with Meta as they push the boundaries of AI at unprecedented scale." So the multi-year, multi-generation collaboration across Instinct GPUs, APU-IC CPUs, and rack-scale AI systems aligns our roadmaps to deliver high-performance, energy-efficient infrastructure for Meta's workloads. And Mark Zuckerberg says, and I quote, "We are excited to form a long-term partnership with AMD to deploy efficient inference compute and deliver personal superintelligence. And this is an important step for Meta as we diversify our compute. I expect AMD to be an important partner for many years to come." So all in all, both companies coming together to form a very long-term strategic partnership. And as part of the agreement, so this is what I was actually talking about, AMD has also issued Meta a performance-based warrant for up to 160 million shares of AMD stock, structured to vest as specific milestones associated with Instinct GPU shipments are achieved. So not only are they going to be a customer, they might also be an investor in the company. The first tranche vests with initial 1 gigawatt of shipments, with the additional tranches vesting as Meta's purchase scale to 6 gigawatts. Investing is further tied to AMD's achieving certain stock price thresholds, and exercise is tied to Meta achieving key technical and commercial milestones as well. So I think it's not just a great deal for AMD, I think it's also a good deal for Meta, because AMD being in this space has a very strong runway, potentially up to $1 trillion in market cap over the long term, and Meta's position in this company could yield very strong returns for the long term. So Meta, since both Meta and AMD are part of the shopping list, Both are very attractive at those prices, at lower prices, the fair values and buy targets. Makes for a very good collaboration between these two companies. Now, the Supreme Court tariff ruling continued to ripple through Wall Street as Washington, D.C. yesterday, as economists race to figure out what President Donald Trump's new global tariff means for the economy. And I think I also read that even over the weekend, even though the Supreme Court kind of ruled against those tariffs, a lot of companies were still being charged the higher tariff rate. So there's a lot of gray area, a lot of uncertainty whether they are going to get some kind of a full refund or if that money is now paid and now irreversible from a tariff perspective. And the first major company to do so in the wake of Friday's decision was going to be FedEx, sued the US government yesterday in a bid to get a full refund of the money it paid for now reversed tariffs. And congressional Democrats are trying to force the government to issue refunds to businesses who paid the duties. I mean, that is going to be a lot of refunds, just a ton of refunds that these companies have already paid in tariffs. And that could definitely put a significant burden on the U.S. government as well, right? So monetary policy would most likely need to step in order to figure out how these refunds are going to work and at what scale are we looking at. So let's take a look at Intuit. For Templehoff, what's up, everyone? Since I didn't sell at 227 this AM, y'all will probably get your chance at 170. Is Hood a buy at 70, or it can go further down because of crypto? Can't have AMD at 170. Yep, so we'll take a look at Robinhood as well. But Intuit pushing up over 6% in pre-market. We got a very strong support at 346. Very, very oversold stock. So you can see on a weekly and on a daily time frame, it is incredibly oversold, weeks after weeks of sell-off for Intuit. And so that support level is going to stay put at 346. And right now we're seeing a nice little lift for this stock here. I mean, this has just been an insane bear flag breakdown. I mean, this was the prior pull, consolidation sideways, and then, oh my God, what a significant drop here for Intuit. So this is a very strong support, which is bouncing off of these levels, also from an oversold level, and resistance is going to be all the way up to 430 for Intuit moving forward. So that's where we're going to be. Talking about Robinhood. So Robinhood's also been struggling. Now, I did share the video of Robinhood. So Vlad and Shiv from Robinhood talking to Bill Ackman from Pershing Square. Very interesting video. They posted this about 12 hours ago, I think, or 14 hours ago or something, of their series fund, right? So pre-IPO and private company exposure to retail traders, which I think is quite interesting concept overall because, for founders, and they also discuss how companies are staying private for longer. And so as a result, for founders, for entrepreneurs, that's access to massive amounts of liquidity. And for retail, it is actually getting access to private market deals, which was restricted to accredited investors or institutional investors in the past. But now with this series fund, it is going to open up the market for retail investors who invest in pre-IPO or private companies as well. So I think that's a very good way to solve a problem, which is an actual real problem among retail investors, and Robinhood is looking to solve that as well. But looking at the fundamentals of Robinhood, we've already talked about this is a very, very good growing company. Profits are expanding as well. Valuation, I think, is a little bit on the higher end, but on a forward basis, it does come down to some pretty attractive and reasonable levels as earnings also scale and revenue also grows. And so we're looking at around $70 as a very strong support, all the way down to as low as $65, $66. So those right there are going to be a couple support levels to watch. And of course, I did a video on Robinhood as well, so make sure that you do check that out if you haven't already. I would really appreciate that. Definitely do check out those videos because I am doing a lot of stock analysis videos on these companies. Okay, my average on HIMS is $26.96. I have $200 available buying power. Should I DCA down, or is it still a risky play? Good question. I think HIMS right now is still dealing with a lot of uncertainty. But if the risk reward, if we're talking about risk reward purely, I mean, this has never been a better risk reward trade than ever before in HIMS, because all the way from $70, it's now trading in the teens. And that right there is massive risk reduction. So one of the things that we talk about at MoneyVest and one of our core philosophies always states that as prices comes down, risk comes down with it, right? So as price comes down, risk also diminishes over time because there's less downside, right? The risk reward obviously tilts as prices come down. So in HIM's case, yes, the risk reward is getting better and better with each passing day, with each day that it goes down. But is it still a buy at $14.50? I think a lot of that depends on all the uncertainty revolving around healthcare stocks. And to read further a little bit, so this was, come down, there we go. So Eli Lilly yesterday launched a new version of a Zepbound, its popular obesity drug that contains a month's worth of doses in one pen. And then the pen could be more convenient alternative for patients who would need fewer devices each month to administer the drug. Prices begin at $2.99 for the lowest dose offered on the company's Lilly Direct platform. Novo Nordisk said yesterday that its experimental weight loss drug failed to match Eli Lilly's tirzepatide. However you say this, let me just pull it up. Tirzepatide in a trial, and Novo Nordisk US shares plunged more than 16%. Of course, we saw Nvidia absolutely getting demolished yesterday, so selling off. I think this entire space is very volatile. I mean, this is very, very risky and very volatile space. Depends very much on trials, on competition, on legal battles, and so there's always going to be that uncertainty and that dark cloud over healthcare stocks. And so if you're okay with that, yes, the risk reward is getting better, but it also comes with a lot of volatility. So volatility is a price you're paying for an incredibly solid risk reward. And so everyone needs to kind of judge that on their own. For me, HIMS was always a very, very small position. It was like a less than 0.2, 0.3% position. Only got about 100 shares in the options portfolio, and that's it. Yes, I'm down quite a bit, 60% on those, but it's 100 shares. It's not a substantial position. And so I may look into dollar cost averaging a little bit and then selling calls immediately to salvage that position any which way I can. But it needs to give me some clarity and some signal that the bottom is in. And even though we can't predict the bottom, it has to come with volume and some momentum on a price action perspective. So watching the candles, if there is a green candle that comes in, takes out the previous day's high, and there is some stabilization, that would give me a little bit of confidence that, okay, the price is stabilizing here and there's a floor that is forming for him. But right now, just every day just gets knocked down further. So there's a lot of uncertainty there. Okay, let's see. So HIMS we covered. Good morning. Is IBM a buy at these levels? Let's take a quick look at IBM. We're seeing a pretty substantial drop week after week, 3 weeks in a row. Support level is going to stay put in the low 200s. So $204, $205 is going to be that support level to watch for IBM. So that right there is going to be that level inside this green rectangle that we're watching for IBM. But it is also very, very oversold. So, I mean, can it drop further? Yes, and I would wait a little bit in the low 200s to actually start looking into IBM further. What do you expect from State OU tonight, though? Can be a double catalyst leading to Nvidia Q4 beat? I don't know. So let's see. State OU. What is the name of that company? What is the name of the stock that you're talking about? Or is that State OU? Gabs, what is it? What is it exactly? I don't know. Can you review ASO? Can you please give your feedback on FIGR, IRIN, DraftKings, PGY? There's a lot of stocks there. I know you have detailed analysis coming up on HIMS, but can you do a quick technical analysis? Yeah, so I just did that. State of the Union. Okay. So I think, yes, leading into NVIDIA Q4 beat. So NVIDIA has a very strong probability for beating. So I already am pricing in that it is going to beat expectations. Revenue and EPS are going to come in with a strong beat. We've got a 100% track record over the last 12 quarters. But the price movement, right? At the end of the day, like with every earnings, what really matters to us? What really matters? It's the stock price movement, right? It's how the stock reacts to those earnings is what really matters. And the answer is nobody knows if that's going to go up or down, right? Because even though we might understand or we might know that the company is going to beat expectations on earnings and revenue, we might still not be able to predict or understand whether the stock's going to go higher or lower. So, price predictions are almost very, very challenging, very difficult to do. And as a result, that's something that that I don't like to do anyway. SOTU is the acronym. Okay, so too. I did not know that. Okay, so coming back over to some of the comments here. HIMS, I did a technical analysis earlier, so very quickly going over it again. As I said, it needs to form some kind of support, some kind of base for us to feel a little bit more confident that the floor is in. But 1350 seems like a better support level to watch for him. So this right here is going to be that support level to watch. Okay, let's see. Abdel here from Borneo. Thank you so much for joining. I think AMD should see more volatility between 210 and 230 in the next weeks. Would you change your fair value of 151 knowing there's a validation deal with Meta? That's a good question. For me, I think it's already pricing in for these kind of deals, even though I'm going a little bit more conservative. And look, to be very honest, I think a lot of these hyperscalers are overestimating how much they're going to spend. At least in my opinion, I think $100 billion is what they're saying. It might come in a little bit lower because that's what happened in 2025. The expectations were much higher. They came in a little bit lower. And they will get revised, right? So right now the market's pricing in a $100 billion investment from Meta. That may come down. And that event of downward revision is what I'm already pricing in for. So I think that fair value stays put. And I think it's a good way for us to keep that margin of safety and that buffer. If AMD comes down to that level, that's an even better deal now that this is already in place. So at 300 shares of SoFi with an average of about $15, I think I'll add at these levels. Great company. I agree. I think SoFi has been beaten down quite a bit, trading down to some very attractive valuations now. What do you think about Nvidia upside potential? Do you see it going up to example pushing 210 even after good earnings and guidance? I mean, there's a lot of constraints in manufacturing power. So I think Nvidia for the long term really has to open up and unlock new revenue streams. I think automation, robotics, and gaming are three very important markets for Nvidia long term. Data center starts to get a little bit more saturated and crowded overall, even though Nvidia is still very much the leader. And they're going to continue with this ramp of infrastructure deals with a lot of these hyperscalers. And the life cycle is pretty strong. We're talking about 3, 4, 5 years out, 7 years out life cycles for these companies to completely redo their infrastructure. But I think automation, robotics, those are two that are really going to catapult Nvidia to at least a 10 trillion market cap business over the long term, because those are some very massive markets for Nvidia, which is the physical AI aspect of artificial intelligence. So right now 4.65, almost 5 trillion. That's good. I think that's going to continue to grow at a good linear pace, but unlocking new markets is really what's going to push Nvidia to greater heights over the long term. Okay, let's see. What do you think about SoFi's dilution issue? I think SoFi has lowered its dilution over the years. So if you come over to the financials, so if you come over to statistics and you look at common shares outstanding, you'll notice that quarter over quarter, yes, we have seen a little bit of dilution every single year. Quarter over quarter is starting to normalize a little bit. So 1.1 to 1.2 to 1.27. So yes, every quarter we're seeing a little bit of dilution that happens. And so that's already pricing for that, right? So fair value is calculated already pricing in for that dilution. And so if that number, and that's one of the best things about the calculator, is that you can also estimate for dilution. So if I come over to SoFi, let me just see here. There we go. If you come over to SoFi, come over to Analyzer, all of them actually have a share dilution plugin, right? You can actually estimate for share dilution as well. So that way you can actually understand that, okay, if the company is doing more or less dilution, how that actually affects the fair value of the stock. Because at the end of the day, we also want to account for dilution for that company. Oh God, I don't know why it's taking so long. There we go. Finally showed up. Okay, so there we go. Average share dilution, we put that in for our analysis. And so if you are pricing in 2%, the company does 4%, that would definitely affect your fair value. If the company does less, that would also affect the fair value, but in a positive way. So what can you say about trading in different currencies? We're investing in dollar, but exchange from one's own currency. Can a weak dollar be a reason for DCA? So, foreign exchange is a whole different world. It's a very, very big world. I know there's a lot of traders in Forex as well. But the point is that you really want to maximize for returns via stocks and investments and not try to get into this hedging game of foreign exchange, right? So, but yes, you always want to look for alternative currencies that can appreciate against your home currencies. For example, when I was in India back in 2021, I was buying a lot of US dollars, right? Every month that I get paid, I'm buying US dollars, I'm investing in US stocks via US dollars, right? And that proved to be very, very good because in the last 6 years, right? So if you come over to USD INR rate, in the last 6 years, look how much USD has gone up against INR, right? So if I come over to the monthly time frame, you're looking at since 2021, it was at 72. So yes, I remember back when 5 years ago, it was at 72. Now it's at 92, right? So that's a 28% appreciation on US dollar alone. So had I just bought US dollars and not even bought any stocks, if I bring that money back to India, in 5 years, I have seen 28% appreciation. Now, of course, that's not a lot. 28% over 5 years is, just about beating inflation. But then you accelerate that by investing in stocks and real estate to then see that growth even further. So that definitely has a lot of scalability. That definitely has a lot of opportunity and potential. So yes, you can optimize for that as well. So if you're in a currency that has a long history of, currency depreciation and, value of the dollar appreciating against your currency, then it does make sense why you would want to invest in US dollars in US equities. Otherwise, it's better to just kind of stick with your currency and then just keep, like I said, maximizing for returns via assets is way more important than maximizing via hedging foreign exchange, because the latter is less guaranteed and less certain. The former is about studying companies, buying the right stocks, and investing in the right assets at the right prices. So that, I think, is more important for us. Okay, average about 415 on Microsoft. Should I buy more or buy Palantir? Need your opinion. I think Microsoft at around 350 makes a lot more sense. You've got 415 average. Even at 380 is a pretty good support. Palantir, on the other hand, we've got a fair value around $80. Support level around 125, 126. And if it does trade under sub $100, would make for a much better deal for Palantir. So I think they're both down 30-40%. Palantir definitely trades at a much higher valuation than Microsoft. In terms of those two, I think both are pretty good, attractive deals here at these levels, but they can get better. If I were choosing between these two, since you already do have Microsoft, Palantir would be a good way to kind of diversify into something else as well. But they're both really going to be in software stocks that are selling off quite aggressively. Technically speaking, where's the next resistance for Nebius? Let's take a quick look here on Nebius Group. So we are looking at a resistance closer to $100, or really, I can just push that up a little bit. It's going to be closer to 109. So 109, 110 is going to be that resistance for Nebius, with a very strong support down at $75, $76 for this stock. Yeah, don't think Palantir will drop below $100, but who knows? Anything can happen. Honestly, this market is very uncertain, and just in general, markets are cyclical in nature, and I think we always have to be understanding of the fact that anything is possible in the market. The moment you think that something can't happen, I would say think again, because we've seen things that we thought would never happen. So markets are always surprising us in the best ways. Okay, MasterCard and Visa are hit because of the Substack article from Citron or something. They describe some great fantasy there. I know. I broke it down yesterday in my research, Citrini research, as a look back of 2028. So they expect a recession in 2027. They expect a massive drop in the S&P 500 of close to 40% from all-time highs. So yes, they did really paint a scenario where we are seeing, the kind of all the wrong benefits of AI, or all the wrong things that can happen with AI. Unemployment, they were expecting at over 10% in the middle of next year. So, yeah, or 2028, I think June 2028. So, yeah, I mean, we'll see what happens. I mean, AI is very untested waters. It's a new industry. It's a new technology. It's a new thing for everyone, right? People leading it, people experiencing it, people using it. It's a new thing for everyone. And how it gets utilized and how far we take it, all of that really is going to dictate the new reset for this entire global markets, right? Because monetary policy, fiscal policy are all going to have to figure out a way to work in this new AI era. Especially, I think that monetary policy needs a complete reset because the tools and the solutions that we have currently are more geared towards the economies of the 1970s and 80s and 90s. Like, that's what worked back in the day. But with the rise of technology and now with the rise of AI, monetary policy needs better tools to combat inflation and, more importantly, unemployment. Because, as I said, if interest rates are lower to fight unemployment, that only puts more fuel to the fire, because companies have more access to cheap liquidity to deploy more into data centers and AI to make themselves even more productive. It's not going to ripple back into finding more jobs or people, but it could go into more investments in AI. So those are some things that were also discussed in that report. Yeah, you're updating the shopping list on MoneyVest platform in March. So yes, at the end of this month, so towards the 1st or 2nd of March, expect the MoneyVest shopping list to get updated fully with the new buy targets, new fair values, new live buys, heavy buys on all stocks. And I'm also going to be putting up the ETF shopping list, which is like 52 ETFs. So expect updated shopping list on at least 40 stocks and 52 ETFs. So that's 92 tickers that I will be posting in the first week of March. 92, okay? And I'm going to be adding maybe a few more small caps. So as we discussed in our previous live stream, that we might actually create a separate small cap shopping list as well. Might be 7 or 8. So we'll just round it up to 100 tickers that are going to be there. I think it's going to be a wealth of information. It's coming straight from our Discord, from my analysis, from analysis of many other members that we have. And then really just kind of going over each stock, fair value, buy target, support, and fundamental levels. So technicals and fundamentals as well. I remember what we went through in the MoneyVest community in 2022, 2023. Everything was burning on the market, but it was buying opportunity to this day. I still have Amazon bought for $90 and Google for $95. That's incredible, man. That's absolutely amazing. So happy to hear that. Congratulations. And same thing happened back in April as well, right? April of 2025, because markets were absolutely getting crushed and we had shopping list, targets. Like this was the entire drop. And we had like buy targets on so many stocks. Robinhood came down to like $30. Fortinet came down. We had Interactive Brokers, Palo Alto Network, Nvidia. We had AMD. Like a lot of these stocks sold off aggressively down to those buy targets, and then since just absolutely exploded to the upside. So, okay. Yeah, let's take a look at Intuit. There's a lot of questions around this stock today. Pushing higher 4.8%. We already did discuss this briefly earlier. So rallies pre-market today, and there's Anthropic connection. So AI company behind the Claude AI model have entered into a multi-year collaboration to bring highly tailored AI agents to mid-market companies and consumers. The partnership aims to integrate advanced AI capabilities into Intuit's suite of financial and business tools, creating solutions to simplify workflows and improve decision-making. It's absolutely crazy. Like everywhere you look, companies are doing deals with AI agents. Anthropic, Gemini, you've got OpenAI, then you've got the chip makers, AMD, Nvidia. Every company is eventually going to either partner with AI, use it, or be done for. So, I mean, this is just like tip of the iceberg of how many more deals are expected to come in the future. Karthik, I bought them because of you, man. I thanked you 100 times already, but I was a noob back then. You shaped my mindset. That's great. I'm so happy for you. And really, apart from the fundamental technical analysis, like really our philosophy is kind of conditioning, mental conditioning, and how to think about investing and assets and capital allocation and risk management and liquidity. Like that is where my focus is always. Like that is what I have to dedicate my life to doing every single day, is living and breathing risk management, liquidity, analysis, opportunity costs is a big piece of the puzzle. All those things, very, very important, because that really is what shapes our investing philosophy long term, right? It's not just picking the next best stock. It's figuring out the right systems, the right strategies in place so we can do this over and over and over again. So yeah, no, I appreciate that, and I'm glad that it helped you kind of shape your mindset, because that's really the end goal. The end goal really is to educate and of course train everyone in a certain way to think about the markets. And I'm still learning every day. My opinions change, my thinking changes, the way I process information changes every day because I'm learning new things. And I think that's really like what it is. It's like an iteration over many, many years. Okay, so markets right now, pre-market, we're looking at QQQs up over 37 basis points. We got SPY basically flat. Hims and Hers continue to get crushed here, down about 7% now. Nvidia is down about 0.5%. Tesla briefly broke down 400 yesterday. It still is trading below 400 right now. About 31 basis points is where we're at. So So that's where we are. And overall, we got crude oil sitting at just under $67 a barrel. Bitcoin and the Ethereum continues to get rejected and breaking down from this bearish pennant. So Bitcoin's next target is going to be closer to 60,000. So that is going to be that level to watch for BTC. And for Ethereum, we're looking at 1750 as the next target, all the way down to as low as 1400 for Ethereum. So those are going to be two levels to watch for Ethereum as well. So a couple more questions, everyone, and then we'll cut the live stream a little bit short today. But let me know if any other stocks we can look at. Can you review ASO and CMI, both outperforming the overall market? So let's take a quick look on these two stocks here, Academy Sports and Outdoors. I think overall seems to be a lot of consolidation. It's been consolidating since 2021, so it's been 5 years of a lot of sideways trading here. We got a support sitting down at 42.50. We got a resistance up to as much as $62, $63 a share. Yes, it's pushing up right now, but it's coming up to that resistance, and it's really been range bound for a really long time. And CMI, on the other hand, has been absolutely insane. Looks like we've done some analysis on this. Starting to stabilize a little bit. We got a support down at 525 for CMI. So that's going to be that level to watch. Okay, what is MasterCard and Visa a good buying opportunity now? So yes, going back to Visa, I think low 300s starts to look pretty attractive. It's going to be the same level from back in April 2025, down a little bit over 19, almost 20%, almost very close to a bear market. So I think 300 could be a starter, down to as low as around here, around 287, 285 as some support levels, to also watch for Visa. MasterCard, on the other hand, breaking down, support level is going to stay put at 465. So that is going to be that next level, and more importantly, the support level where I could see myself potentially looking into MasterCard as a starting position as well. Okay, so last but not least, we're going to take a look at Oracle and FIGR very quickly. Oracle continues to trade down as one of the software names. Support level is going to stay put down to 120. So 120 is going to be that next support, down more than 50% from its all-time highs from back in September of last year. And at 120, it's going to be down over 64%. So that's going to be that next level to watch as a support. And finally, Figure Technologies. This stock has also been absolutely crushed. I mean, just talk about going down as fast as it went up. And it's now trading down to a new all-time low once again here. So resistance is now going to stay put right about here, $34, $35, with a support level that is going to stay put roughly around $28.40 for Figure. And that's the thing with not overstaying your welcome, right? If these are supposed to be trades, treat them as trades. Do not overstay your welcome and just get out, make profit, and be done with it. Because the longer you wait in greed that you can expect higher prices, then it becomes more speculative in nature, and then this happens. So, all right, hope you all enjoyed this video and found it helpful. Again, link's going to be down below if you're interested in joining our MoneyVest community. 5 more days left with that 40% annual discount available. And any questions, just email me at admin@moneyvest.com. I'm more than happy to get on a Zoom call to help you with your journey. As always, happy investing. I'll see you all in the next video.